Ladies and gentlemen, please be seated. Our program is about to begin. Ladies and gentlemen, please be seated. Our program is about to begin. Please welcome Semafor's Andrew Friedman.
Good morning, everyone. For those of you that are in town this week, you picked the hottest week of 2026. So welcome. It's a little colder in here. I'm Andrew Friedman, General Manager and Head of Public Affairs and Corporate Partnerships at Semafor, and we're absolutely delighted to have you all here today. We're living through a moment of profound transformation across the financial ecosystem. With digital payments, AI, evolving regulation, and the modernization of banking infrastructure, the way people and businesses interact with money is being overhauled, creating new opportunities, new questions, and new responsibilities for public and private sectors alike. That's exactly why dialogues like the ones we are hosting today are so timely and essential right now. Semafor launched in 2022 with a commitment to transparent, global, fact-based journalism, and since then, we've grown to over 1 million subscribers by helping audiences understand the forces shaping business, policy, and society. Today's discussion truly sits squarely at the intersection of all of that. This morning, we're going to hear from an outstanding group of lawmakers, regulators, and fintech innovators exploring what the next chapter of financial technology means for consumers, businesses, and policymakers alike. But before we begin, we want to extend an incredibly sincere thank you to our partners at the Financial Technology Association for making today's conversation possible and for their continued leadership in advancing innovation across the financial ecosystem. With that, let's jump in. Thanks again for being here.
Please welcome Representative Bryan Steil of Wisconsin and Nicholas Wu of Semafor.
All right, Sarah, thank you so much for being here. Congressman Steil of Wisconsin is a member of the House Financial Services Committee and the chair of the House Administration Committee. So excited to talk today.
Thanks for having me in.
Yeah, so I wanted to start off a bit by talking about legislation that we're seeing moving over on the Senate side. They're moving on the Clarity Act that might eventually make it its way over to the House. Is that something you support the House taking up?
Yeah, I'm actually really bullish. We remain in dialogue with our colleagues in the Senate as they're moving forward on the House-passed Clarity Act. The passage coming out of the subcommittee, out of committee markup, was positive, had Democratic support. That gives me the optimism that it has the bipartisan support that's going to be needed to get 60 votes on the Senate floor. There seems to be a commitment to bring this to the Senate floor in the coming weeks. I'd love to see it before the 4th of July. I know there's also talk before August recess. The sooner the better. And then I believe that the final product is going to be something that I and my colleagues can support in the House. Again, there's a lot of conversations going back and forth between us, our colleagues in the Senate, as they negotiate the final portions of this bill. But I think it is so absolutely essential that we get this piece of legislation done. I think there's a lot of capital sitting on the sidelines, both human capital and financial capital, waiting to be deployed. And if we get clarity through and get that legislative certainty, I think you'll see significant investment in this space.
It's pretty rare, though, that it seems like there's a Senate bill coming over to the House side that you guys are okay with, which brings me to my next question. I want to talk about the housing bill that's coming up in the House probably today.
Yeah.
Right? I mean, how are the House and the Senate going to come to any kind of agreement on this legislation?
Great question. So I think the legislation that we're going to have an opportunity to vote on today is a solid compromise bill. I think everybody walks away with something on this. I don't think everybody walks away with 100% of what they want. I think Chairman Hill has done a spectacular job taking a Senate product, taking a good House product, taking a Senate product, and tweaking the Senate product, I think, for substantive improvements, which tees us up for a better final product. I think as these conversations have gone on, we've seen more and more statements from our friends in the Senate that they're open to seeing their product amended and tweaked with the House adjustments. And I think what you'll see is an overwhelming support of that legislation later today. And I think the Senate will then take that up and pass it all the way across the line. The bicameral nature, I mean, you guys know this as well as anybody, is sometimes works well and sometimes doesn't work well. But I think in the area of housing, I think Chairman Hill has done a really good job by being such a thoughtful policy mind. Subcommittee Chair Flood as well, navigating this and taking that Senate product and making some substantive tweaks that are needed to make sure that this is a product we can get all the way across the line.
What do you think made this bill different than the other ones where the Senate has passed something and then tried to jam the House.
Yeah, the narrative in the town is that the Senate can roll the House. I don't think that actually shows up in the data as much as some folks in the media want to describe. I think our leadership moving through clarity, I think shows that. The Senate is obviously making adjustments to the product, but I think we really got the ball rolling in that regard. If we look at the digital asset space further, inside Genius, I carried the bill stable in the House. The final product that passed is in large part a combination of those two bills. If you look at kind of round one of the text to the final product, a lot of that is collaboration that's occurring kind of in what I view as like shuttle diplomacy between the House and the Senate. And so although sometimes the Senate moves first and the House moves second, in this case there's a little bit of a ping pong in the housing bill, and I think you actually see that. I'm kind of old school. I would love to see like a traditional conference between the House and the Senate, but that's just not done anymore. And so a lot of this is much more of shuttle diplomacy. And so at the end, I think we are delivering really good substantive bills that address a lot of the policy concerns. And then it creates a lot of talk about exactly who has the control of the power. But at the end of the day, the people that are interested in the policy are usually at the table having those conversations.
That makes sense. I wanted to ask a bit about some more recent news. President Trump signed an executive order yesterday encouraging fintech access. Do you think it's now time then to advance legislation like the PACE Act?
I think all of us are looking at the advancement in technology. President's executive order kind of puts a nice focus on this and saying, what can we do to improve the efficiency inside our broader payment space? And if we look back, if you go back, I don't know, 20, 30 years, and you think of the digitization side, right? And so we leave paper, we enter the digital world, and you get these massive efficiencies. As we look in particular with blockchain technology, distributed ledger, there are even greater efficiencies that can be had. I think there's significant opportunity to leverage into the technology and make sure that we are leaning in on the technological side, because I think there's a huge opportunity on reducing the friction inside the system, reducing costs. I think that'll provide not only additional opportunities for consumers, but I think it is a real opportunity to bring down costs. I think it's something we want to study, though we want to get right. There's a role in our system for banks and credit unions to play. We want to make sure that we have this system operating efficiently and effectively so that there's opportunities for folks to go get home loans, et cetera, or loans in general. But also that we have the most efficient system, and we're not simply allowing guardrails to be put in place because there was an incumbent there before.
Right. I want to ask something more within your House Administration Committee domain. A few weeks ago we talked about the potential for a prediction market ban for members and staff in the House. Where has that landed?
Well, I think we are close at getting legislative text that we can get all the way across the line. This probably couples the member stock trading bill that I think we will ultimately see voted on and passed. And the president has called for it. He called for it by name in the State of the Union, the Stop Insider Trading bill. That's my legislative text. There's a huge opportunity here to remove even the appearance of impropriety. So obviously illegal behavior is illegal and should be punished, period, full stop. But inside insider trading, the biggest challenge the biggest challenge of prosecuting insider trading cases is getting the evidence to prove that somebody engaged in insider trading. So the way that you address this, in my opinion, is to remove even the appearance of that impropriety by banning it outright. And so I worked, previously at a publicly traded company. C-suite executives are subject to a whole host of rules and regulations beyond the general public to prevent even the ability to inside trade on their stock. There's a whole rules and regulations that sit at the SEC. What we did in the Stop Insider Trading bill is kind of took that and said, how would we apply that in a congressional environment? What would a 10b5-1 plan look like, knowing that you can't just lock out one given stock? And the solution, in my opinion, is to say, look, if you're a member of Congress, if you're an elected representative, you can't purchase individual stocks, and you can't trade, and we remove the economic incentive for anybody to engage in any form of insider trading by pre-announcing a given sale and put real teeth behind it. The prediction market, I think, plays in the same way. I think everybody agrees that elected representatives, and maybe more broadly than that, but elected representatives shouldn't be engaged in predictions on federal elections or on items that have significant public policy implications, whether or not that's, in particular, national security is the first one that comes to mind and has been in the news because an individual engaged in that way, in all evidence, it appears illegally. We have an opportunity, I think, to combine those topics and pass this. I think it's one real substantive step we can take at starting to regain Americans' trust in the institution and how it operates. I've been at the forefront of this Committee on House Administration, so it's kind of a blending of my two sides between financial services and the work that I've done on stopping illicit financing, combined with the work on House Administration and kind of the rules in which we're all governed by.
Yeah, I mean, just to put a finer point on it, do you think that the Stop Insider Trading bill would cover prediction markets, so there's not a need for a separate bill?
I mean, yes. Exactly how this all plays out, we will see. I do think that we can bring forward an amendment by the time we go to the Rules Committee. We've been working on text in this space. The prediction markets are so new and novel that a full wholesale ban might not be the right legislative text. So what do I mean by that? So and this applies, to members or spouses, independent children. And so if you have a dependent child who's 19 years old, they're still a dependent, or they're 18 years old, they're still a dependent, they go to college, and they place a $1,000 prediction on the Super Bowl. Is that something that the member should be ethically barred from facing a whole host of ethical challenges? You could have an opinion on that. You could say yes, no, but it probably has nothing to do with the member's job, placing a prediction on that versus going to DraftKings and placing a bet on the Super Bowl. Society says you can do it, go right ahead. We want to make sure that we get this text right. In the ability in some of these prediction markets to utilize this in really thoughtful and creative ways. We don't want to stifle that innovation and development, but I think there's some obvious areas. Predictions of federal elections, things that specifically are engaged in federal policy, and it's an easy coupling into the Stop Insider Trading bill. And so we're finessing the text on that and hopefully be in a position to roll that text out in the near future.
Do you have a target time for when you want to try to get the bill to the floor?
Yesterday. The president called for this at the State of the Union. We have broad bipartisan support in the House. Leadership is committed to bringing this to a vote on the House floor. And I'm of the view that when we get our opportunity to bring this to the House floor, and I think that will be in the coming weeks or months, we will see an overwhelming vote in support of it. Because the president has requested it. We've got great support in the United States Senate. Senator Ricketts has introduced companion text in the Senate. We're building support in the other chamber. And I think we have a real opportunity then to see this passed and signed into law.
To zoom out a little bit, what role do you see for Congress then in regulating prediction markets as a whole, even beyond members' own conduct?
Yeah, it's a great question. It's both old legislative text, but it's also a novel use for this product. A little bit of the way that I look at this is I think there's some similarities to very, very early crypto, meaning going back, call it 10 years or so. And part of this is some of these are operating offshore. So Polymarket today, you don't have, in theory, you don't have access to it, but obviously individuals are grabbing a VPN and going offshore. In the same way that a lot of crypto companies were locating themselves offshore. So this idea of what I call the fallacy. There's two fallacies. The fallacy, I'll do the right. The fallacy on the right is the libertarian view of there should be no rules and regulations and the market will work out. What we've seen is that we get regulators that are operating under old rules and regulations, poorly applied to current technology. That the fallacy on the left is what I call the nanny state fallacy, which is, if I provide rules and regulations and stifle this is kind of what I view as the Gary Gensler approach. If you stifle it, it will actually end and cease to exist. The fallacy of that is it simply moves offshore. So these technologies, there's a market demand for this. If it's going to be onshore or offshore, I'd rather see it here under thoughtful, structured rules and regulations than being a real challenge, in particular on the consumer side, for something that's completely unregulated offshore. There's areas of this that I think are going to be really beneficial on just price discovery, risk discovery, and I think you're seeing a lot of financial services companies very interested in how they can leverage this technology. I think there's also a role to make sure that consumers are protected in this space. And then further, as we noted, that public policy officials aren't financially benefiting themselves or others that they might be providing information to.
I see, that's really interesting. Beforehand, I was talking with some folks that I think are sitting in the audience here about one of your pieces of legislation on earned wage access.
Yeah.
I was curious, what are the prospects for that legislation in the House this session?
I feel good about it. I think we continue to build support on earned wage access. And if we went up to 50,000 feet, a lot of this was in discussions about payday lending and other things. I think that's actually the wrong way to think about it. Why is there a market demand for this? There has been a disconnect between people's work and receiving pay since large ERP systems came in. If you and I were working at the end of the 1800s and we carried a 50-pound sack of potatoes around all day long, you not only expected, but you did get paid at the end of the day. And if you didn't, you were going to have effectively a fight with the owner of that company on the spot to receive your pay. In came large ERP systems. People started getting paid biweekly, once a month, and you got this massive delay between pay, but between work and reward. That's not true in every industry. If you're a bartender or a waiter or a waitress, you may walk home at the end of the night. I actually worked at Applebee's, and the best part was you could leave your Applebee's on a good Friday night with the cash in your wallet. And so you were more than excited to take the late shift, and you fought to try to stay later if the money was good. In an environment today, if you work at take a big box retailer, whether or not that's a Target or a Walmart or a Home Depot, without earned wage access and large ERP systems, you could go to an employee and say, hey, it's coming up in December, Christmas is near, would you like to take an overtime shift and make time and a half? And that person may need those funds. They're not going to get paid out for 2-4 weeks. This is an opportunity, if done correctly on the earned wage access side, where an individual can come and maybe your car breaks down. You need an extra $250, where you could say, I'd love to work the weekend shift at Target or at the Amazon and just be paid at the end of the day because I need that money right now. That reconnection between work and reward, I think, is a really core principle in American capitalism. And we've created a disconnect by kind of legacy technology that just hasn't kept up. And I think the earned wage access piece breaks through that and says, if you work today, you can get paid today because there might be a reason you want to receive those funds. And I think connecting that is an absolutely essential piece where currently we have a failure of technology. And so I'm bullish on this. We've got bipartisan support for it. There needs to be rules and regulations in this space. We don't want people getting ripped off. We don't want people paying massive fees associated with this. But you can do this right. The technology is there, and I think it will transform how a lot of people work in this space.
One thing that I noticed this week was that the president has called for attaching the SAVE Act to either the housing legislation or to the FISA renewal. Is that something you support doing?
I fully support the SAVE Act. I mean, that came through our committee on House Administration. All the election integrity products moved through our committee on the House side. And so whether or not it's photo ID or citizenship verification, I think they're absolutely essential pieces. The play call of what legislation you attach to what to get passed, ultimately that's going to be a higher pay grade. The leader, the speaker, the president are always having those conversations. I'm of the broad view that, if you can get the whole loaf, take the whole loaf. But if you can get half the loaf, take half the loaf. And so what I'm focusing on is let's get as much policy done as we possibly can. And let's leverage pieces of policy to get as much through as we possibly can. But I'm not of the view that we benefit by doing absolutely nothing to claim that we were trying to get something else across the line. And so I actually think a lot of these things are really common sense. I think photo identification, we could go down a whole rabbit hole here on all my election integrity work, but photo identification I think is just mind-blowingly common sense. I think the American people support it because it is common sense. I think it's needed. Now whether or not how you tie that in and how you get that across, this is all a game of how you get 60 or 50 votes in the Senate. And we're all being challenged by Senate rules right now that are requiring 60 votes. And so there's going to be play calls as to what gets attached to what. That's a higher pay grade, but I'm supportive of the legislation.
I see. So I would be remiss without asking about some of the news from last night. Your colleague, Congressman Massey, lost his primary to someone who was endorsed by President Trump. Does this mean to you that there's less room for dissent from the president in the current Republican Party?
I don't know that that's the exact comment. I think in the case of Congressman Massey, I think he took some positions that Republican and conservative voters didn't support. In addition to that, right, he opposed a series of policies of the president. I think his lack of support for, in my opinion, our ally Israel, which is an important part of my broad national security views. He disagrees with that. Obviously, he can disagree with that, but I think that there's a lot of voters across the country that disagree with his position on that. The president leaning in, I think, puts a larger target on that, and I think that shows the strength of the president's support amongst the base. But I think the base supports the president because I think he's moving forward on really important common sense legislation. And I think you see that support play out in a number of areas. I think you also see Andy Barr, one of our members on the Financial Services Committee, who's done a great job, had the endorsement of President Trump, also won overwhelmingly. And so the president's incredibly popular because I think we're moving forward really strong and good legislation. And I think you're going to continue to see that through the remainder of this cycle.
Makes sense. We've just got a little bit of time left, so just one last question for you. Wave a magic wand, you can get the Senate to agree to anything. What is one piece of legislation you would send over there?
I think the election integrity would be the biggest thing that we could get done if the Senate is going to actually make meaningful and substantive change.
Got it. All right, sir, that's about just all the time we have. Thank you so much.
Thank you very much.
Please welcome Cetin Duransoy of Revolut and Semafor's Ilana Shaw.
Cetin, hello. Great to have you with us today.
Great to be here. Hi.
A little bit of bio about Cetin. You have more than 2 decades of experience in tech, payments, and finance, and you are the former U.S. CEO of Raisin, which is a leading fintech marketplace that you scaled up very impressively. Thank you. I wanted to start, though, with a Revolut-focused question here about the OCC. Its leader is going to be speaking at this event a bit later, and the OCC has been experiencing a remarkable surge in bank charter applications. You obviously have personal experience with that. And based on that experience and the back and forth, what advice would you have for new applicants, especially digital ones?
Yeah. So obviously every application is different, but I can share with you guys at least what we heard from our regulators on what were the strengths of our application. And just by the way, Revolut is not a household name in the United States yet, though it is 2 out of 10 working adults in Europe is a Revolut customer, 8 out of 10 in Ireland, so we are hoping to replicate the same penetration in the United States. But the things we heard from our regulators around what are the strengths of our applications is we've been operating in US for the last 5 years, so that history helps. We know what this market looks like. We've been operating with the partner bank model, and we are grateful to our partner banks that allowed us to enter to the market. But as we are growing, I think one of the things that our regulators told us is we have the experience in the marketplace, and now it's time to control our own destiny. So that's number one. Number 2 thing is obviously the capital. Our capital is coming from, again, just to give another Revolut stats, Revolut has been founded a little over 10 years ago, and yet we are not public yet, but we announced our financials publicly. Last year, Revolut revenue was over $6 billion, and the net profit was over $2 billion, $2.3 billion. And Revolut has committed to invest $500 million in the next 3 years in the form of capital, marketing, and people. That obviously is a huge strength, that the capital is coming from, not from a VC, but coming from our operating capital. The other one is we are already regulated by a Tier 1 regulator, PRA, in UK. In fact, we are in the mission of being the first truly global bank As such, as you look backwards and as you're going to see in the future as well, pretty much every quarter we get a new banking license from another country in the world. Last quarter it was Mexico, and that multi-regulatory environment is another strength of ours. So I'll let the audience to take away from what it can be applicable to each one of them, but these are the things that we heard from our regulators.
Moving on to AI for a minute. Revolut has integrated it in certain areas and seen great success, but obviously there's an ongoing policy debate on multiple fronts about how strategically and effectively that can be done. Tell me a little more about how you chose where to apply AI and areas of concern you might have about it.
Yeah. So AI is a huge enabler for Revolut. Like when you think about right now, Revolut operates in 39 different countries, and we are in the process of being a regulated entity in all of them plus more. If you start reading the regulations for every single country that you want to operate in and launch a bank in every quarter in at least one of them, that's beyond humans can do. So our LLM models, and we use our own instances of LLM models for specific purposes. One of the strengths of Revolut is we have a single tech stack and a single app that serves the whole world. That's unheard of because you got to create a new version for every different country. And in order to be able to do that, you need to be able to read the regulations of every country and understand what are the common things and what are the incremental pieces in each country so that you can parameterize the software accordingly, and AI plays a huge role there. Another application that we use is compliance. When you think about being the first truly global bank, the number one thing for us is the FinCrime. Because we don't want to be transferring money from one criminal to another. In fact, we're 12,000 people. Half of those people are working in the FinCrime division. And what we started to do now is agentic AIs for compliance reviews, both for KYC AML as well as the transaction monitoring. And we are proven that it is statistically significantly better than human reviews of the transactions. And what we are doing is, because we are growing so fast, we are now complementing our human reviewers look into much more complex cases as opposed to the regular cases are being reviewed by AI. This is in addition to obviously every single individual is using AI, has to use AI because of the productivity gain that we gain within Revolut.
How about customer service, though? There's obviously some public relations aspect to fully automating customer service. How have you found that?
So our customer service is also like using full AI, LLM models. I think it's a great way to good old days of you have to ask the question in the right way to get the right answer. Those days are over. In the Revolut app, whenever you ask a question, you get an LLM-based answer based on actual account information data. So that's another area that we are applying as well. Obviously, hallucination is a big problem that needs to be controlled incredibly well, and we train accordingly our LLM models, especially in the customer servicing area, very strictly. But it is just like any other technology. There are advantages, but you need to understand the limitations as well.
Interesting. Well, you mentioned fraud as one area you're working on in the AI space. There's also legislation out there called the Scam Act on the Hill that would put some more onus on social media companies to start policing, deceptive ads that might be affecting the fintech sector. Do you see that as a good starting point to change the system, or do you want a completely new legislative framework?
That's a great starting point. We talked about all the good sides of AI. There are bad sides of AI, just like our compliance agents, agentic AI is doing a great job. Fraudsters are going to have their own agentic AIs. We're going to see a massive increase in fraud activity in the coming months, years. We are already seeing that. And right now, when you look at how everything works, the whole onus is on the financial institutions to capture the fraud and cover for the fraud, which is not fair, mostly because, there are publicly released or leaked information that a material portion of the revenue of some of the social media companies is coming from fraudulent posts. And that is, right now, incentives are not aligned. So why would a social media company try to eliminate fraud if they're going to lose 15% of their revenue by just that elimination? And I'm not saying nobody is doing anything evil per se, but the incentives are not aligned. I think Scam Act is a huge leap forward to distribute the responsibility and liability to all the entities involved. That way, number one is there's going to be less reason for social media companies to control that revenue. Number two is if they are liable, they're going to be far more diligent into who is applying, who is not applying. Social engineering became so much easier in the last 15 years with internet. Now it just is gone to a next level with agentic AIs because you don't even need humans to replicate another human to get into someone's mind. You can let LLM models do that and create personas depending on who the person wants to interact with.
That's very intense. But back to the Scam Act for a second. Pardon me. Given how much revenue social media companies get from this process, though, you've got to imagine there's going to be a big lobbying battle over this. What are your thoughts on whether this is actually achievable?
So we already know there's a huge lobbying going on with social media companies. Like I'm not going to repeat the names because they are not verified, but I heard some really large number of dollars are being spent on lobbying. Again, to your point, 15% of the revenue of a social media company is a very large sum of money.
Yes.
And spending the right amount of money in lobbying certainly pays off for that lost revenue.
Moving on to a bit of current events, actually. Just yesterday, the Trump administration unveiled an executive order on fintech. And, it was hailed by the industry, obviously, but there's also legislation that a lot of folks are saying is kind of required to make good on some of these aims in terms of accessing the Fed's rails. Do you think a bill is necessary, or is this EO kind of enough for the industry to get started?
So I read the executive order 3 a.m. in the morning in the first couple sentences, and I had a debate in my mind, should I go back to sleep or read the rest of it? I choose to go back to sleep, so I'm not going to be able to comment on it. But what we appreciate in the whole industry is there is so much openness into innovation, and that certainly is a very welcome change that we are observing.
Interesting. You also mentioned that you're not yet public, and I wanted to ask about some reports about a $200 billion potentially maximum valuation. Understanding you can't get into private information here, is it safe to say that what we're reading is accurate and you are moving towards an IPO with a valuation as high as possible?
So I think publicly available information is Revolut valuation as of November 2025 is $75 billion. Obviously, we are growing fast. The founder and the group CEO, Nick, has publicly stated that 2028 is the earliest IPO date. And I think the key thing for us is we are in the business of, like if you're a financial institution, the trust of public is the most important thing to that institution. And for that, we want to be regulated. That's number one way to gain that trust from public. And number two thing is being public. So it definitely is in our future. I neither can comment nor validate the accuracy of the new valuations, but 75 billion where it was, and obviously we continue to grow.
And 75 billion is obviously nothing to sniff at. But when it comes to the U.S. market itself, obviously you described how much of a foothold you have in Europe. Is there anything else in the policy space that you're looking for from U.S. policymakers or hoping for is more accurate?
Yeah. I think the whole Fraud Scam Act is a huge starting point. We are looking forward to that. Openness to innovation that we started to see from the current administration is a big welcome change as well. We've been incredibly impressed with our application process. Our regulators are still incredibly fair. They are asking the right questions. So it's not like the regulation has come down, but what has increased is the openness to innovation. I think that's a change that we observed that we would love to see that it continues. And it's going to manifest itself in very different shapes or forms. But that's a big shift that we have seen that we very much welcome.
How about public attitudes and public attention? I mean, Americans are very attached to the notion of a traditional bank, despite how much the fintech industry has grown. Do you see public education as critical for this market?
I think at the end, innovation. If somebody is providing a better solution out there, I'm a firm believer that it is going to be fun. One of the success criteria of Revolut has been that it actually doesn't spend as much marketing in Europe as many of the other established institutions are. It's partly because it is simply a better product. And if you look at the foundation or the investment thesis of Revolut, how it originally came out, there's a lot of cross-border movement happening in Europe with multiple currencies. And you don't even realize that even in US, if you are going to Europe, Mexico, Canada, when you use your card or any other form of exchanging money, actual cost to consumers is anywhere between 4 to 6%. You're never going to see that because it is hidden in some places. Revolut has reduced that cost to 30 to 50 bips. So there's a 10x reduction in foreign exchange currency. And consumers see that, and then when they see it, our cost to acquire is vastly lower than other institutions around the world. And that's one of the benefits that we have. I think once we launch our bank, like our sole energy right now is A, get the regulatory approval, B, launch the bank. When we do both of them, we're going to be scaling up our offerings in the United States as well. And I'm a firm believer that a good product sells itself. Doesn't mean marketing is unimportant, but a good product sells itself. And consumers are going to see both through word of mouth as well as through by just testing it on their own.
And just to reiterate for our audience, in case they don't know, what is your timetable on the application, expected? As far as approvals?
So if you look at the history of how everything is going, we expect to go through the process. Obviously, I don't have a crystal ball. I'm not the one who is going to be giving the approval, but OCC has a stated KPI of giving the preliminary approvals in 120 days. And they have proven that with some of the applications that went in earlier than us. Obviously, U.S. regulatory environment is relatively complex with 3 different regulators needs to give their license, OCC first, FDIC second, then OCC again, finally Federal Reserve. But with all 3 of them, we have great relationships. So I don't know exactly when it is going to happen, but what we are seeing is there's a very speedy approach from regulators to get this done, again, in a very fair way, but also in a very accelerated way as well, which we appreciate.
Well, we'll look for it. Thank you so much for your time, Cetin.
Thank you. Appreciate it.
Please welcome Joe Hack of Zip and Andrew Friedman of Semafor.
Joe, welcome to DC. Very warm week here in DC. You've spent 20 years in the lending space working to build the kind of financial flexibility you watch people go without growing up in Flint, Michigan, where stretching a paycheck was really just a fact of life. That experience, from what I've learned, has shaped everything about how you think about consumer finance. Now you're running the U.S. business for one of the biggest buy now, pay later players in the world. Really glad to have you here, so let's dive in. Zip, it's a buy now, pay later provider. Many of the audience have probably used buy now, pay later, but might not know exactly what it is or how it's different from a credit card. Could you unpack that a bit for us?
Yeah, thank you, and thank you for having me. You certainly brought the warm weather for suits, so thank you for that. I think what's really important to understand about buy now, pay later is more the use cases of how the customers think about it. On one hand, you have more prime and super prime customers that look at this as an alternative to credit cards. They get a credit limit, and they really try to use this as a installment loan the way it works. And an installment loan, typical construct is a pay in 4 product. You pay up front, and then over a biweekly time period, you pay off that loan. What's really wonderful about the product is it's a finite structure. You don't have any danger of rolling the debt. There's not an APR that's going to compound on you. It's just a clean structure to finance something. and work it off your personal balance sheet. The alternative path, and really where Zip lives, is we're really focused on underestimated Americans. And underestimated Americans, the way we see it, is the traditional financial system really isn't serving a paycheck-to-paycheck customer all that well. They live very, very tight. Any disruption in their financial lives, call it a flat tire, creates ripples throughout. And really where Zip fits in is in that mismatch of income and expenses. You have lumpiness in income, your lumpiness in expenses, they don't always sync up. And if you think about the way, I would say, a credit privileged person manages the 30-day float on a credit card, that's much in the way these BNPL products are being used for that underestimated American. They're using it for that unexpected expense. They're using it to just bridge the cash flow needs on a week-over-week basis. And really, I consider it much more of a cash flow smoothing product for these customers. And I think it's really, we see that in the numbers, we see that in our customer stories as well.
So let's touch on that a bit. It definitely plays out differently depending on who's actually using Buy Now, Pay Later. Buy Now, Pay Later customers are often people, as you mentioned, without a credit card, prefer not to use one. That actually ties into your own personal background growing up in Flint, Michigan. Can you tell us who your average customer is, and again, maybe touch a little bit more on why exactly they're using Zip products?
Yeah, look, I grew up in a very blue-collar town. I had a great upbringing. My dad worked at GM on the line for 30 years and made a good income, but it was paycheck to paycheck. If anything came up, like the mental gymnastics, the financial gymnastics you had to go through were substantial. And if you didn't have the capability in that moment, the ripples this would create, all of a sudden you have late fees on your utility bills. Now your FICO score is going to start to get damaged. It just starts to spiral. And really where I view the financial system is it's not really built for people that live very tight. And we can all make assumptions about why people are living tight, but I think the financial system is inherently structured to just start off with judgment. I'm judging you on how you spent your money. I'm pulling your FICO score and judging you on how the heck you got a bad FICO score. And it's really losing sight of all the nuance that's in an individual's lives. And I really think like meeting the customer first with trust, which is one of the things we do very uniquely in this industry, is we start with a very low limit. We watch the behavior. We watch to make sure the affordability is there. Our average loan size is only $147. And when you think about that in a pay and for construct, they're really only financing over a 6-week period. It's a very short duration asset that really helps bridge those moments and really helps avoid those unnecessary late fees, those unnecessary overdraft fees. And the other thing that I think is really critical about this is the transparency at which the product is structured. We charge a fee that is it's flat, it's not risk-based price, everybody pays the same fee. And why that's important is if you talk to the customers, they're scared of credit cards. They've turned themselves upside down at some point on a credit card, and I think like it's a bigger problem for us as an industry. This idea of financial literacy, to me, is the industry telling the customer they should get smarter. I think we should get simpler. We should get easier to use. And I think BNPL is one of those products that's really taken steps forward on that front.
Thanks for that. It's real people, it's real stories about how they're using this, yet the public narrative around Buy Now, Pay Later, it doesn't always reflect that. There's a lot of judgment out there about Buy Now, Pay Later. Can you set the record straight for some of the common misconceptions for us today?
Yeah, there's a lot of myths out there, and I'll maybe cover a couple of them. One, I think it starts with judgment. If you use Buy Now, Pay Later for groceries, you must be in a state of stress. I would challenge how many people in this room use their Amex card to put their groceries on it. It's the same 30-day float. We're judging the fact that this customer doesn't have access to that tool. And that tool is really, really valuable in managing your day-to-day. So it's not a state of stress. You're getting one small piece of that consumer's puzzle, and we're judging on it. And when I look at the affordability for these customers, to me, it's how do you meet them in their moment? And in particular, I think we all like to think about a financial journey and financial well-being as this linear line we're all on, and it's just incremental. Like, it's lumpy. People go up, people go down, and I think we're meeting the customer, meeting them where they're at is really, really critical to understanding how to present products to these customers.
So misconceptions to the public is one thing, but Washington also has a lot of questions around this. Let's talk about the regulatory piece for a second. There's been a lot of regulatory attention on buy now, pay later over the past few years, from CFPB to state level rulemaking efforts like we're seeing in New York right now. How has Zip been navigating that environment?
Yeah, it's an agile environment. I think it really does start with this misconception. I mentioned the irresponsibility, 98% payback on this asset within this customer base. And when you think about that, like, that's not operating irresponsible. You think about the $147 as an installment loan that can't roll, they can't defer it, they can't pay a minimum payment. It's a much more structured product than I think it's given credit for. Sure. So when you think about the regulatory environment, I think where the challenge becomes is it's a new product and we want to treat it like a credit card. We want to treat it like an installment loan. It is partially a credit vehicle for customers, but it's very much regulated under an installment loan. And I think we have to cut through as an industry the use cases, how the customers are using it, how it's making them successful, without just overly burdening it because it's new and we don't understand it. And I think when you look at the growth trajectory of this product, you'll hear it from the customers. They appreciate the simplicity. It's 6% of e-com here in the US. It's over 15% of e-com in Australia. So it's in the 20s when you look at Europe. Like, this is a product that is simpler, easy to understand for the consumer, and frankly, it's a better vehicle for bridging some of these day-to-day gaps responsibly.
Absolutely. Well, I always like to end on an optimistic note here, so let's close out by looking to the future. If you think about the next 12 to 18 months, where is Zip placing its biggest bets in the US, and what excites you the most about the next chapter for Zip?
You know, the closer we get to our customer, the more you see just the stress of kind of that day-to-day cash flow. And when you really dig into like how they're managing it, there's this element of, you know, how much time do you really have to think about your finances? You know, I wake up and think about it all day because that's my job. It's not everybody's job. And when you play out that scenario, the lumpiness in income is a real thing for consumers. You know, they're paying fees on late fees and other things because they're unable to match that. So when we look at the future, and I think this gets to something Congressman Steil had said around the EWA product, it's really about providing access in that moment, trying to find that cash flow smoothing capability. I think earned wage access and cash advance programs that are digitally native have started to bridge that same problem for consumers, injecting that short-term liquidity. Think of it as working capital for these consumers to really be successful in their day-to-day lives. The payback behavior, the data is there to support that this isn't irresponsible. This isn't people buying Pelotons and, you know, big screen TVs. This is people just bridging their day-to-day. So that's one element. I think there's additional ability just in the way EWA is solving kind of the lumpiness of income. You know, there's lumpiness in expenses too. So you think of utility bills and other things that crop up, and even rent. Rent's a big lump sum for a consumer day one. Where I get excited is the capabilities that we're developing from a technological standpoint. AI is increasing velocity. AI is increasing capability. Our ability to meet the customer where they're at and smooth any and all expenses in their day-to-day to make their cost of living cheaper is really where I think it's exciting.
Amazing. Well, Joe, thanks so much for joining us here today and for the insights.
Yeah.
Cheers.
Thank you.
Thanks so much. Thanks so much for sharing.
Please welcome Representative French Hill of Arkansas and Semafor's Eleanor Mueller.
Thank you so much, Chairman, for taking the time to join us. This is a congressman who needs no introduction. He is the chairman of the House Financial Services Committee, one of the few former bankers to chair the House Financial Services Committee. And you have a big day today. The House is slated to vote on bipartisan housing legislation. Basically, the House raised concerns over a Senate-passed proposal and then produced text that now has the support of the White House. What has that process over the last week been like for you?
Well, it's more like over the last 6 months.
Yeah.
This was a priority that Senator Scott and I both had starting the 118th Congress. So the previous Congress, we both were committed to, if we became chairs in the 119th Congress, we were both committed to a bipartisan, bicameral housing bill that would reduce the barriers to producing more housing, reduce the regulatory costs, increase capital access from the banking industry to housing, reduce some of the long-standing bureaucratic building code issues and things that, we're just raising the cost per housing per square foot in both blue cities and red cities, big cities and small cities. That was the theme. Mm-hmm. And Senator Scott called it the Road to Housing Act. And so we introduced that in the 118th Congress. So in the 119th Congress, my preference in the first part of the year was to get the Congressional Review Act measures passed and do our work on digital assets. So while we were working on getting the Clarity Act through the House and the Invest Act, some of our priorities in the House, Senator Scott was getting the Genius Act through the Senate, and then he turned to housing. So he had a bit of a head start on us on getting his housing product out of the Senate. We had scheduled to do it in October, and so we got tangled up in the Schumer shutdown of October and had to postpone our hearings and our markup on our housing effort till November, unfortunately. So that was, our schedule was thrown off by...
I think we were getting some white noise on your mic.
Wow, okay. So many mics.
Change it up.
So little time. So we... we're a little behind that effort. So starting in the fall, the Senate wanted to move their bill, but we hadn't moved ours. And so when we got into the first quarter of this year, we turned the year, we were able to get back in sync. So the House moved all the bills that we've been working on, many of which were contained in that Road to Housing effort in the 118th Congress. Senator Scott was able to move his bill, which also contained a lot of that overlap from the 118th Congress as well. But in the Senate bill, there were some provisions in it and some drafting in it that I didn't have the support for in the House. I mean, I just didn't have the votes. I couldn't pass the bill with a majority of the majority. And in the House, most smart speakers will put bills on the floor that they have a majority of the majority party for. It's a good way to lose support in your conference if you don't do that. And we had, as Eleanor has covered significantly, we had almost 70 members not on House Financial Services say they couldn't vote for the Senate bill as drafted. We had the Main Street Caucus, the Republican Study Caucus, and the House Freedom Caucus, all Republican member organizations, tell us that they couldn't support the Senate bill as drafted. So we tried to see if we could find a path to change the bill in a bicameral basis. And we basically concluded that maybe the best way to go about it was to see if Ranking Member Waters, the senior Democrat on the House committee, would support the direction that we were going in. And so that's where we ended up. So we have taken the Senate bill as passed by the Senate that had 89 senators vote for it, and we have, I would say, relatively modestly amended it to try to correct some of those challenges that I faced in the House where I just didn't have some Democratic and some Republican support. We have a very narrow majority in the House, and it takes that kind of collaboration to get important bills like this to the finish line. So I hope today that we'll have a good bipartisan vote in the House on these amendments, and that can give the Senate some confidence that once again we've narrowed the differences and perhaps they can take this bill up and pass it. And if not, we've narrowed the differences. And I know it shocks America, but that's called legislating, and it's a bicameral process and a bipartisan process. It's a lot of fun if you want to participate in it, but you can't be in a hurry.
So, I mean, you touched on this briefly. What exactly do you expect to happen in the Senate once it presumably passes today?
Yeah, I don't know. I mean, yeah. I would. We tried to very narrowly tailor the things to address the House concerns, which are not new. The reason I gave you the little history lesson is these are all the same issues that go back to last fall, in the differences between the two bills dating to last fall, with the only difference being significantly President Trump's State of the Union speech, where he argued that large institutional investors should not be bidding against moms and dads for cash, in an existing home sale. That was something that he'd read about, seen about, he'd heard about from people around the country. And so he wanted to limit a large institutional investor essentially bidding for cash against a mom or dad trying to buy a house. And you can certainly understand that position politically, but you've got to write that correctly and in a balanced way so that you hit the president's goal, but you don't disenfranchise a lot of capital that flows into real estate development in build to rent or senior housing or a lot of other specialty forms of housing that are dependent on institutional finance, even if that's not quote unquote a private equity firm, owning that house, bidding against that person. It can be swept up into that. And Paul Clement, the former Solicitor General for the United States, wrote a persuasive piece that the Senate text also required a 7-year mandated sale, and that could be considered a taking and could potentially be litigated as unconstitutional. So we wanted to address that part of the Senate bill, fine-tune it, make sure it met the president's test, but narrowed the scope of that text in the Senate and removed that 7-year mandated sale for new construction because of the argument that Mr. Clement made and a lot of entrepreneurs. Wall Street Journal had a significant survey that's well over $10 billion of financing for new construction housing had been halted as a result of the Senate vote.
It's obviously an uncomfortable situation, right? The Senate Banking Chair advanced something that you, as the House Financial Services Chair, believed was not the appropriate solution to a problem. And so where does your relationship with Chairman Scott stand coming out of this experience?
My relationship with Senator Scott's been great from day one when we both got elected from our respective bodies to be chairs. We're good friends. We get along well, and so the relationship is good, and we have done so much already. People tend to focus on, the here and now and not the big picture. The big picture is in 2025, we got some of the worst rules promulgated by the Biden administration. We were able to reverse those using the Congressional Review Act. We solved a major consumer finance frustration in trigger leads that Mr. Haggerty and Mr. Rose on my committee in the House, we got that bill signed into law by President Trump. We got through budget reconciliation a cap in the mandated unaccountable funding from the Fed to the CFPB. We were successful in getting that in budget reconciliation. And there is no small step in having Genius, also written by my pal from Vanderbilt days, Genius, Bill Haggerty's bill, passed and signed into law by President Trump. And last July, we got the Clarity Act out of the House with 78 Democratic votes. That set the stage for the vote that Senator Scott took just last week in committee to advance clarity for Senate consideration with a bipartisan vote, John Bozeman having already passed it in the Senate Ag Committee. So there's been a lot that we're doing, and the Senator and I want to land the plane on a housing package that the President can sign into law, and then we want to turn and we want to get the Terrorism Risk Insurance Authority reauthorized. We want to get the Ex-Im Bank reauthorized. We want to continue to work on our community banking agenda, and very importantly, our capital formation agenda, which in the House we call the INVEST Act.
Yeah. Well, that's a great transition to the next thing I wanted to ask you about, which was the Clarity Act. Obviously, the Senate Banking Committee recently at last advanced its iteration of what the House Financial Services Committee advanced last year. What do you think of the Senate's bill?
I think they worked really hard. They've got a decent product. We're collaborating with them on comparing text and comparing definitions. We're also doing that with what John Bozeman, my senior senator from Arkansas, got passed as chair of the House Ag Committee. So I think we're headed in the right direction to a final package on the market structure for digital assets that President Trump can sign into law. But it's not over till it's over, and I'm sure there are a lot of meetings and a lot of work in the Senate before Senator Bozeman and Senator Scott feel like they're able to bring that to the Senate floor. But we're working hand in glove to try to be as helpful to that process as we can.
What changes would you need to see between now and then to ensure House passage as is?
I think we just need to see, start that meeting process. We're comparing text and having those conversations. So I think it's too premature to say, oh, this paragraph needs to look different. I don't think we're at that stage yet, because the Senate already produced a bill that was substantially similar to the House bill, and the House has been involved in that. It's like the debate last year on the stablecoin legislation. The Senate bill was substantially similar to the House bill. We'd worked together collaboratively on it for months. And so there are differences, and we'd like to see those differences amended, but we're going to continue to work on that.
It's an FTA event. I'd be remiss to not ask you about the FinTech executive order that the president signed last night. There's related legislation in your committee, Congresswoman Young Kim, that would expand FinTech firms' access to the Fed's payment rails. Do you see a path for that this Congress?
I think we're certainly going to do our due diligence and hearings on this. You also have to recognize the Federal Reserve has their own request for information on this process as well, that Governor Chris Waller is leading for them, so that there's some continuity of approach on payment licensing through the Fed that has a common theme to it, as opposed to all 12 regional banks thinking they can do something different that's not a single policy. So I think we're going to begin a set of hearings on that topic, on the need for perhaps a nationwide payment, licensing regime, rather than being reliant only on state-by-state money services licensing. But it'll be a good discussion, but I think it's one where you've got to build consensus. You can't just snap your fingers and say, I want it this way, and that's the way it's going to be. And I think people need to evaluate that on a holistic point of view in the federal government. So obviously the OCC will have a point of view because of their trust charter capability, and the Fed really does want, I think, sincerely to get a common policy for the Fed that Governor Waller is attempting to navigate. So I think all that comes together at a good time, and I look forward to the discussion.
You also said last month that the committee might be exploring whether or not there's a path for it on prediction markets, which is something that Congressman Steil talked about when he was on stage earlier. Do you see the committee taking up anything related to prediction markets this Congress?
Well, I've always been in an education component. I think members of Congress need to know what the law is today, and then I think it's important that Chairman Atkins and Chairman Seelig also put forward the enforcement of that law in their own rulemakings that are relevant to whether something's a security-based swap or a non-security-based swap. That involves obviously both Ag Committee oversight and House Financial Services Committee oversight. But where I've started this year is just on member education. I don't think people know. A lot of people didn't even know that there's a federal law governing this from Dodd-Frank and post-08 financial crisis. So it's a little hard to legislate and get out front on policy making when you have members that don't have that basic understanding of current law, current rulemaking, current responsibilities at SEC and CFTC. And that's where I've proposed we start. Secondly, on the bigger issue of sports in prediction markets, you're going to see that heavily litigated in the states, by the states, in federal court, no doubt, or in state court for that matter. So that's an added complication. But I've told my members, I think Chairman Atkins and Chairman Seelig have the primary responsibility of demonstrating that they're able to oversee these markets in the right way in compliance with the law. So that's that's my starting position, as opposed to jumping to a conclusion about what we should or should not do in the Congress.
I've got about 50 more questions for you. But
Let's
go. But unfortunately, our time is up. Thank you all so much for tuning in, and thank you again,
Thank you all
Chairman,
very
for
much.
making the time.
Please welcome Representative Maxine Waters of California and Semafor's Nicholas Wu.
All right. We have Congresswoman Maxine Waters, who is the ranking member of the Financial Services Committee, with us today. Looking forward to our conversation.
Yes.
So I wanted to start off by asking a bit about what's happening on the Senate side. The Clarity Act on cryptocurrency looks like it's moving through over there and could come to the House. Is that something you support the House taking up?
First of all, let me just say that we need to understand that the discussion, the controversy, all about crypto and who has jurisdiction is extraordinarily important to understand what has happened on the Senate side. Would it be the SEC or the CFTC? And we are seeing now in the Senate bill that the CFTC will have tremendous jurisdiction over Bitcoin and some of the other entities. So having said that, what is your question?
Well, I mean, the Senate will pass this likely. I mean, do you think this is something the House should take up?
Well, as you know, we passed the bill, and you understand what was in that legislation, and still the big issue was jurisdiction. And so the Senate has done very well in deciding jurisdiction between the SEC and CFTC, and whether it's a security or a commodity. Now, the House will have to take a look at what the Senate has done. There are going to be hundreds of amendments to that bill before we know exactly what is coming from the Senate, and then we'll see what happens.
I see. So I wanted to look a little bit at next year. I mean, if Democrats take the House this fall, oversight seems like it will be a particularly large focus for a Democratic majority. What do you see as a top Democratic House Financial Services target of oversight?
Well, as we're here talking about crypto, we have to be very concerned about crypto and what it ends up being. Already, we've gotten the indication from the Senate about jurisdiction, as I alluded to, and now it's a matter of what those amendments will do relative to jurisdiction, which I think is extraordinarily important. But of course, we have members who are basically supportive of the SEC or the CFTC. I am concerned about corruption and the president, and whether or not there should be ownership of crypto by the president, by Melania, by the son, by the brothers, and whether or not even members of Congress should own crypto. And certainly the cabinet members should be included in that. I think it's very, very important to deal with that issue. Members of Congress and the House will be wrestling with that, and we're going to make sure it's part of the continued discussion.
How do you see your committee's level of engagement with the Trump administration, particularly the Consumer Financial Protection Bureau, especially if you're looking to conduct oversight next year?
Well, as you know, I have indicated more than once or twice that I'm very concerned about the President of the United States of America. And I'm concerned about his cabinet, who has been chosen, whether or not they're competent, and whether or not they feel a sense of independence from being told what to do by the President of the United States of America. I'm worried that the President can sue the Justice Department, and taxpayers pay him a terrible, awful sum of money because he feels that he has been harmed. I'm concerned about inflation. I'm concerned about tariffs. I'm concerned about the war in Iran. I'm concerned about affordability in this country that's being led by the President and his decisions. So crypto is central to what we've got to deal with and what we've got to confront and understand how not to create additional problems of not protecting investors.
If your committee does look into those corruption issues next year, are you convinced that the administration will comply with subpoenas and oversight requests from your committee?
Am I sure that the administration would comply what our needs are? You know better than to ask that question. Of course not. Of course not. This president not only has used executive orders, but disregarded the Constitution. Can you imagine if the President of the United States can start a war without even coming to the Congress that is mandated by the Constitution? What makes you think he will care about anything but what he wants to do? And that's how I feel about it.
Do you think that private sector targets might be a more apt target for the committee if the administration then
I'm sorry,
comply?
repeat that.
Do you believe that private sector companies might comply more with subpoenas and be a more ripe area for oversight if the administration does not comply?
The private markets have decided for the most part that the SEC is not the right jurisdiction for them, and that they have not had their questions answered and their concerns addressed. And a lot of that had to do with them believing that crypto is more commodity than security. And so that might be settled in this bill, the Clarity Bill, somewhat, I don't know, but we'll see what happens.
I see. To pivot a little bit to news of the day, the House is going to take up its housing bill probably this afternoon. Do you support it?
Well, I think the housing bill is one of the more positive things that have happened in recent years. I know that Chairman Hill is here today. Chairman Hill and I have worked very closely. We have been in negotiations for hours, for days, for months about the housing bill. And I do believe that what we have learned over the time that we have been involved with the question of housing will help us in this bill that we have organized to be able to know what else can be done to get rid of homelessness and create housing opportunities. So this is a bill that will get rid of some of the impediments that have been encountered for so long. For example, I discovered in Los Angeles that our metro had vast ownership of land that had been vacant for years. Nothing was being done with it. And I discovered that they could make it available without having market value. And so now I want to look at the whole country and what agencies have vacant land that they control that we can help mark down the cost of acquiring that land for the development of affordable housing. That's just one example. On the banking side, which you will hear from Mr. Hill a lot about, we're looking at all kinds of things. I'm looking at encouraging the banks, for example, with a pilot program that would help them to do more to fund smaller amounts for mortgages. I know that the money is made on the big mortgages, on the millionaire homes, et cetera, et cetera. But there are people who can afford $2,000 homes and $3,000 homes. I want them to be able to get those mortgages from our banks. So that's in the bill. And Mr. Hill is going to talk a lot about what's in the bill. He's an old banker, and so he knows a lot about that. But we have learned an awful lot that we have put into this bill that would eliminate the impediments to developing affordable housing and making sure that we get people off the street every night.
What do you see as a top priority for a Democratic Congress on housing in terms of what might go through your committee next year?
I plan on having $1 trillion bill, $1 trillion bill to be able to deal with everything from the creation and development of more affordable housing with the assistance that is needed to do that, including what I just alluded to about how we can bring down the land costs. I am looking at helping our younger generation with down payments that they can afford, which are about 20%. They can afford mortgages based on what they're purchasing. But getting that 20% is very difficult. I believe we should be helpful with that. I believe that with public housing, we should increase the amount of money that we're utilizing in order to do the repairs and the renovation that is needed. I was up, in the Bronx very recently, and what I saw was startling. And what the needs are great. And so we're looking at all of that, and I am insisting that we get the kind of support, certainly from the Democratic aisle, that would support $1 trillion bill to deal with these kinds of issues that will help us to increase more housing for families, affordable homes, and rental also. Thank you.
That's trillion with a T. That's quite an ambitious piece of legislation. Is that one of the first things you want to see a Democratic House take up?
Absolutely. I have housing as one of my primary focuses, is doing something that will help to deal with the problems that we're confronted with that are absolutely shameful in this country of so much and so many. I think we can do a lot better, and housing is very important. So, but we can walk and chew gum at the same time. And so certainly I'm looking at housing, but I'm also looking at all of the agencies in our jurisdiction because we've got to make sure that deregulation does not strip the protection from consumers that are needed, and we always have to pay attention to the constant push to deregulate.
Congressman Steil and I were talking up on stage a few minutes ago about prediction markets, a big conversation right now over whether or not members of Congress should be able to take part, and congressional staff for that matter. Do you think that should be banned?
I absolutely think it should be banned. We need to have some guardrails on prediction markets. I think that too much can take place without rules, without regulations, without transparency, and yes, I think it should be banned.
What role would you see for a Democratic Congress in regulating prediction markets? What sort of guardrails would you like to see in place?
Well, we should be looking at what I referred to broadly as guardrails. There has to be some rules to the game. We cannot have it continue in the way that it is doing. Don't forget, our main job in that committee is protection of consumers in every way that we possibly can. We have to look out for what's happening at the SEC. I mean, that is our cop on the block, and we got to make sure it gets the funding to do what is needed in order to be successful, and on and on and on. So deregulation is something that we have to be concerned about constantly, and that's high on the agenda.
Do you support also banning stock trading by members of Congress?
Absolutely. I think that we should be very, very careful about the information that is available to us so that we're not in a position to use that information even by mistakes and by having others handle our accounts in ways that will enrich us. So I'm very, very careful about that.
And lastly, I wanted to ask a bit about a much broader conversation that's happening in the Democratic Party now over future leadership and what folks want to see there. You've had quite a legacy on the Financial Services Committee. Who do you see as carrying the mantle for you in the future?
Let me be very clear about this argument and discussion that has developed about age. and about opportunities for young people. I do believe that everybody should have the opportunity, with qualifications, to try and be a member of Congress, to try and be in positions for any of our regulatory agencies. I believe in the vote. Now, having said that, I don't think we should talk about whether or not we should give up the mantle. I think it should be about supporting the idea that everybody should have an opportunity. Young people should run for these offices, and if they are competent, if they're capable, if they raise the money, if they do all of those things and they win, then they should have the seat. For those of us who have been there, I want us to be absolutely looked at, to be criticized, to be examined, to see whether or not we have done what was expected of us, and whether or not we have truly represented the people that have put us in these offices. If we're not doing that, then we shouldn't be there, and we will probably not win our seats. But if we have, then I'm one. We'll stay there. I'll be there. I'm not moving.
Got it. Well, Congresswoman, that's all the time we have. Thank you so much for the conversation.
Oh, this is plenty of time. Thank you. All right.
Please welcome Sarah Levy of Betterment and Semafor's Ilana Shaw.
Sarah, thank you so much for joining us today.
Thank you.
A brief note on you. You are the CEO of Betterment, obviously, but before that, you were the COO of Viacom Media Networks, where you oversaw global strategy, finance, and operations for
I did from kids television to wealth management, a very natural transition.
Right? Speaking of natural transitions, executive order from the Trump administration. It established Trump IRA. It established a way for workers who don't have retirement savings plans at work to access options, but it's still pretty limited in scale, right? It's essentially kind of just a website, and it would require legislation to go further. Do you want to see legislation to expand access to that packet of workers, and what should that look like?
Sure. So stepping back for a second, Betterment is an investing, savings, and wealth platform, and we're very focused on retirement. I never knew that in my life I would be as passionate about retirement and setting people up for a successful financial future as I am. And I think this particular executive order is for sure a step in the right direction. I mean, what we've been doing at Betterment for 15 years is expanding access to low-cost, high-quality financial products. And I think, access is really the key word here. And so really what this EO is a little bit more of like a marketing addition to products that already exist. But the reality of access is that it has to be available, and then you have to know it's available. And so where I think, this EO is heading in the right direction is basically telling people, here is an opportunity to come to this website and find low-cost, high-quality investment opportunities for you in retirement. I think the challenge, and again, we need to sort of go further than just an EO, is that we applaud the idea that there are caps on fees in these products, because that's really important, particularly for savers, who at low balances, right? But I think what isn't addressed in the EO is the question of platform fees, or how do you service these accounts, right? Servicing smaller financial accounts is costly, and I think in the fintech industry, we've done a great job of bringing those costs down as low as humanly possible, but there still are costs to servicing. And so I think that some clarity around kind of how the fee structure can work will be important to actually making this an effective policy. It's not, to be honest, a meaningful change. There have been a lot of policies that have been similar in the past, many of which have had very low adoption, and so hence the reason why it's great that there's now sort of a marketing push behind it. But the next key will be, who's available to offer these IRAs, and how do they help kind of market the program.
Do you see a role for the private sector, and like, have you already had conversations with stakeholders about that, kind of saying like, look, we want to work with you, partner with you, maybe we'll provide some dollars to help marketing to increase access if?
Well, the reality is these are IRAs that are largely available anyway. So this is more about kind of an overlay on products that exist. So I don't think there's really, the private sector is already, very engaged in offering IRAs and bringing costs down on those IRAs. It's really this in combination with a series of other, some of the Trump accounts for, early access for infants. Like that's the newer piece of the puzzle, I would say.
Makes sense. And good segue to Trump accounts,
okay,
which are also being implemented pretty quickly. And right now, stop me again if I have this wrong, there is just one trustee and one custodian. But as a big believer in expanded access, how would you want to see that changed over time as hopefully more people catch on?
Yeah, so I think, applaud the administration for getting people started early. The power of compounding is magic. And for folks who didn't previously have access to, to the financial markets, to get them sort of in there and get access and be following is a fantastic start. So I think that's step one. And yes, more directly to your point, there is currently a bottleneck in that there's only a single provider where you can get access to these accounts. I think in terms of moving quickly and getting started, that was sort of the practical way to do it. But yes, I would say that what we need is a sort of trustee system whereby anyone who meets the requirements should be a place where you can open these accounts. But I think as importantly, actually, is not just the opening of the accounts, but it's the portability of the accounts. And so first you have access, and then you have friction. And so the key is, if you're getting these accounts when you're born, right, over a long life, you're going to move to multiple employers, you're probably going to move financial institutions, whether that's a fintech or an established incumbent. And I think the idea, just like other financial products, that these need to be portable is going to be a really important second step of the legislation. And I think, the worry, I want to stay positive because I think we're heading in the right direction, but I think the worry would be in the 401k and the retirement space now, there's a tremendous amount of friction, much more friction than there is in the taxable investing arena in terms of the portability of accounts. And there's paper, and there's sending checks, and there's room for fraud, there's time out of the market. Like, these are sort of concerns that circle the 401k space and that have the potential to be sort of equally problematic with these new accounts. And so let's fix them both.
Do you think legislation will be required for that? Is it possible to have a follow-up order?
I think so. I think the key, if we're going to stick with Trump accounts for a second, the portability will for sure require legislation. And I think ultimately opening up access so that people can get started and parents can get their kids started at the financial institution of their choice feels like the way, again, access is about access, like to state the obvious, is about access. So we want people to be able to go wherever they want to gain access to these products. And as long as you meet the requirements, that seems reasonable. So that seems like, very clearly something that will require, regulatory. I think on the sort of friction side, yes, because for years people have gotten 401ks kind of trapped at institutions, and they either lose them or they're out when you transfer them from one institution to another, they can be out of the market for as much as 60 days. And the real actual financial loss to consumers in that transition is palpable. There's a stat that I heard that I thought was really powerful. $100,000 rollover can be out of the market for 60 days. That can cost someone $76,000. Wow. Over a lifetime, not to mention, checks can get stolen, there's fraud in checks. So I think, where do you need regulation? You need this all to be, it's time to be digital. And it's time to have regulation around how long can the money, how quickly should this need to happen? And if it's digital, you should be able to move an account, you should be able to move it quickly, you should not have to be out of the market for very long, and all of this could be handled regulatorily.
That's really striking as somebody who personally has had to roll over a 401k. Most of the people in our audience probably had. I had no idea it was that great of a loss.
Well, you get on the phone, you have to talk to 3 different people. and they make it hard, right? And that's just not productive for the end investor whose money it is. And in the taxable investing space, we have ACATs, we have ways that money moves digitally, and there's no reason why. It's safer, it's faster, it's cheaper. There's really no reason for it.
Well, we all listen to the great lawmakers talk here, though, and not that many of them brought up retirement legislation. They're talking about a housing bill in the future. They're talking about crypto. They're talking about fintech, but like, there's not really buzz around a specific retirement bill. Do you want to see some?
So, I mean, always and yes. So, you know, the beauty of retirement is it's totally bipartisan. And so it is actually something that could get done. And I think in 2022, the Secure Act was tremendous because the Secure Act basically provided carrots for companies in the 401k space to have to offer to get paid tax credits to start 401ks. So imagine you are a big company, 50% of Americans work for big companies, 50% of Americans work for small companies. Small companies have historically not had retirement solutions for their employees. Secure 2.0 basically said, here are tax credits, small companies, so that it can basically be free for you to introduce retirement benefits to your employees. At the same time, states had a stick, which is states introduced mandates that said smaller and smaller companies are required to have 401k plans. So that's beautiful. So we're expanding access, we're getting retirement in more hands. But you still have an enormous freelance economy, you have people who work from home, you have caregivers, like this is who we now need to take care of. And that's where I think the IRA program kind of starts to get there, the Savers Match starts to get there. So I think there's like there's a lot in the works. But yes, today it hasn't maybe been the...
Interesting. Well, moving to a different topic for a moment, but really not that different. Market volatility. You know, everybody picks up the Wall Street Journal and reads Semafor and sees it. It also has an effect on savings. Looking out there at what's going on, do you have concern that like the more people pay attention to the ups and swings in oil prices and overall investment markets, they go, ooh, I can't save as much. They pull back.
Yeah. So, well, more than a concern, I think what we're seeing, particularly in the lower income thresholds, we're seeing people actually pull hardship withdrawals out of retirement savings. And look, there's a lot of pressure on consumers right now. The price of gas is, out of control. Tariffs have caused a lot of angst. There's fear of, what's AI going to do in terms of job dislocation. So all of this has kind of created at the low end of the economic spectrum an incredible amount of worry, and even in the middle, in the middle of America. So I think what we're seeing very palpably right now is sort of two things. One is we're seeing a rotation out of cash and into investing. That's a positive development, right? And that's kind of as rates have come down a little bit, that's kind of a natural behavior. And now, of course, we don't know, where rates are going to go, so maybe we'll see what happens there. And then the second is this withdrawals from retirement savings. And if you think about it, like, even people in 401ks, if you have access to 401ks, folks with below $50,000 salaries are much less likely to participate. And it's just true because you're not thinking about 30, 40 years from now. You're thinking about how am I going to put food on the table and, get my kids fed. So
how are hardship withdrawals currently treated in events like this? I mean, do you want to see changes to that now that they're on the rise? So people aren't punished essentially for needing to take advantage?
No, I don't think. I think that it's reasonable that there are penalties to withdraw earlier because I do think, and maybe there's something temporary that could help through, sort of economic hardship. But I think in general, we do want to encourage people that if you can find the extra dollars to save for the future, we want you to be able to leave that money in those accounts to benefit from the power of compounding.
Moving back to Trump accounts and portability and optionality for a minute, obviously there's a huge opportunity in the fintech space there. Do you see kind of digital products as the forefront for retirement savings from legislators and policymakers' perspective? Let me kind of expand access in writing, or do you see it more like us and traditional folks, we should all have the same optionality versus a leg up?
I think we should all have the same optionality. I think, again, choice is always good and competition is always good. Why? Because it gets, it has more people marketing the products and it forces us all to compete on price, which is ultimately what you want, which is better for the end consumer. I think if there's something that we're worried about, I would actually sort of an adjacent topic would be open banking and the idea of consumer access to their data. And I think actually that is Probably if I were to have a big concern right now, that would be my biggest concern, is let's ensure that consumers have access to their own data and that they have access to that data for free. And I think talk about competition and leveling the playing field and keeping costs low. Like, my worry is if fees get imposed on customers if they want access just to their own data, we'll have to pass that along it will stifle competition, it will stifle innovation, and it will, push more costs onto consumers at a time when more costs to consumers is not what we're looking for.
Fascinating. So talk about fees to access your own data, which I don't think most consumers and customers are aware of. Like, just your personal data on your investment patterns with your
So imagine right now you sign into your app and you want to look at your balance. Nobody charges you for that. Right. But you have third parties connecting balances from incumbent financial institutions to fintechs, and the incumbent institutions are saying it's costly for me to allow that transfer of data. The reality is the investment has already been made. It's not costly. The investment has been made in safe APIs for that information to travel, and there's a little bit of a sort of anti-competitive idea afoot that, let's charge new folks, fintechs, to get access to that data. And the reality is the banks don't own that data. That's the data of the consumer, and so the consumer should have access to their own data for free, and they should be able to use the products they want to encourage competition.
Well, that makes a lot of sense. Do you feel like regulators have that on their radar?
For sure, it's on the radar. It was regulation and rulemaking that was 10 years in the making that kind of hit a pause a year ago, and we're hoping that we get back on it soon.
Very fascinating. And quick lightning round, is there any sort of wish list policy priority for retirement savings that we haven't talked about that you want to just flag?
I think the biggest single improvement we could make is in this area of friction, reducing friction, right? Would be, how do we automate the transition of funds from one institution to another and digitize that so that it can be low cost, safe, and fast? And that's good for customers, that's good for choice, that's good for cost. So that would probably be the place I would focus.
Well, fascinating. That is unfortunately all the time we have. But Sarah, thank you so much for being with us.
Great. Thanks for listening.
Please welcome Senator Tina Smith of Minnesota and Semafor's Burgess Everett.
Good morning, everyone. I'm Burgess Everett, a Congressional Bureau Chief for Semafor, and this is Senator Tina Smith from Minnesota. She'll be leaving the Senate at the end of the year, but I'd say you're kind of going out with a bang. Would you agree with that?
I'm kind of what?
Going out with a bang?
I hope so.
Okay.
I hope so. I promised that I was going to be. I don't know. I don't really love the metaphor of running through the tape because it seems
everyone
sort of
says
it seems
very
sort of sweaty and like not very dignified.
Right.
I'm working as hard as I can until the end. That's for sure.
So let's talk real quick about what's going on in the Senate this week. You guys have a reconciliation bill that you were fighting very hard. The president has established an anti-weaponization fund of $1.8 billion. Is that something that Democrats are going to make Republicans vote on this week?
Well, I mean, I have yet to talk to a single person who thinks that this is a good idea. What is it, $1.776 billion to basically bail people out. And then, of course, the worst was that yesterday afternoon, the president said, by the way, we're also going to include in here complete immunity for any tax violations that my family or I might have ever done. And even the Republicans are saying this is just a bad look. So come to reconciliation. The minority party doesn't have a lot of power in reconciliation. But what we can do is call for votes. So, I mean, it's hard for me to imagine that we wouldn't have a vote asking to strip this out and to not do this. And we'll see how people vote. It's interesting, isn't it, Burgess? You follow both caucuses so closely. And there was definitely a lot of ripples in the water yesterday.
Yeah. Was that a good day to be a Democrat?
It was a good day.
There probably haven't been too many when Trump has been president, but Senator Cornyn, President Trump endorsed against Senator Cornyn. Your war powers resolution advanced for the first time.
That's right.
And another Republican senator lost his primary over the weekend. So we're seeing a little bit more divergence in their party. Has it been a good week for Democrats?
It's funny because on the one hand, I have huge respect for Bill Cassidy, who lost his primary after the president endorsed his opponent. And I sent Bill a message and just said, I think, it's the Senate's loss to not have your integrity and your principles in the Senate. So on the one hand, I hate to see that happen. A body that should be about actually accomplishing things and not just about sort of loyalty to one man. And I think many of us on the Democratic side have been hoping and praying and waiting for our colleagues on the Republican side to, show some spine and to stand up for themselves. And so if that's going to start to happen, that's a good thing for the Senate, and it's a good thing for our democracy, I think.
You think there was a direct correlation between him losing his primary and 2 days later voting for this Iran war powers resolution?
People ask me all the time, now that I am not running for re-election, whether it's like Tina Unbound, would you do the things that you're doing because you don't have to worry about an election? And, you always like to think that you would continue to do the thing that you think is right. I would say that's true, but you're less stressed about it.
Yeah.
And I bet that Bill just felt a lot less stress.
A little less weight on his shoulders.
You don't have to worry about what the retaliation is going to be.
Well, let's get into Tina Unbound a little bit.
Yeah.
You are not a big fan of the Clarity Act that's come out of the
That
Banking
is
Committee.
true.
What do you see as the biggest problems with that bill right now?
Well, so I see this bill as, first of all, let me just say, my view of it is that people in this country should be allowed to invest in whatever the heck they want to invest in. But if we're going to pass rules of the road to establish some basic consumer protections and to give some legitimacy through our regulations, that we should make sure that we're actually really doing that. So my concerns with the Clarity Act as it passed out of Senate banking was that it failed on that in a couple of different ways. The first and most obvious is that it did not include anything related to prohibitions on conflict of interest for elected officials, and particularly the Trump family and the president himself. And we know that what's happening here, they've made, like $1.4 billion by some reports in money off of crypto, while at the same time they're establishing the regulatory framework for that industry. And that's just a blatant conflict of interest. And even the Democrats who voted the bill out of committee, my colleague Senator Gallego, for example, and Senator Alsobrooks said nobody should interpret this yes vote today as a yes vote on the floor until we can resolve, when we resolve these ethics issues. And I am grateful for my colleagues on both sides that have been trying to get to some agreement on this, but it for sure isn't there yet. And I've got other concerns as well. This bill was opposed by law enforcement. It created a big opportunity for some of these crypto platforms to charge something that quacks like interest, to provide a benefit that looks like interest and yield, though they're calling it something different. And that's a real concern for undermining the stability of community banks, for example. So I think there's some issues to be worked out.
Is it weird for Democrats to be on the same side as some of these banks that maybe 5, 6, 7 years ago would have been far more pro-Republican?
Well, I've always been a big supporter of community banks in particular. I worry a lot about the massive concentration in our financial sector, like I worry about that in other sectors of our economy. More concentration just puts a lot of power in the hands of fewer and fewer institutions and people. But community banks are the lifeblood of small towns and rural communities. And when when you're passing a regulation that could easily result in flight of deposits from those community banks to a crypto platform without any of the same consumer protections that you would have in a bank, I think that's a big worry, and I think it's a bipartisan worry. I brought this up in an amendment, or I attempted to, on Thursday, and the chair ruled it out of order, which was very unfortunate. Tina Unbound would say it was something more than that, but.
Well, and also the ethics amendment didn't come up in committee because Senator Kennedy told me it had been ruled out of order as well, but he also said he's open to working with you all on the floor about it.
Well, so, they're arguing on the one hand that it is out of order, that it's really an issue for the Judiciary Committee. Okay, fine. But then let's hear you all say that you would support an ethics provision in the bill. And I really didn't hear that. So it makes us wonder.
But you have leverage as Democrats.
Yeah.
They need at least 7 of your votes on the floor.
Yes. That's
right. Does this bill pass the Senate without the addition of that ethics provision, or do you think Senate Democrats would block it?
I mean, I can't imagine, and I hope not. I mean, there's also this other issue which we can talk about. It's not like America is out there calling out for a market structure bill on crypto. There's so many things that we're not getting done in the Senate right now. And so just in terms of our process and our procedure, how are we going to find the time to do this and to move this forward? I mean, clearly it's a big priority for some folks, but it's not the priority of most Americans.
But there is a lot of money behind this.
That's for sure.
Especially in politics, which has been a new development, I think, over the past maybe two-ish election cycles. We're seeing these groups pour in lots of money in these races. Some for Democrats, I would say a little bit more for Republicans, if you looked at the numbers, especially in a race like Ohio in 2024, when the banking chairman, Sherrod Brown, lost.
Right.
What do you think the effect has been on these crypto money in politics?
Well, it's very, very interesting. First of all, this is huge money, and there's so much power in Washington because of the huge money that is pouring in, both to Democrats and to Republicans. And I think that it is intimidating to some of some members of Congress. I think well over $100 million in the 2024 cycle, $40 million spent against Sherrod Brown. And in 2026, right now, the crypto, the big PACs, Fair Shake and others, it's like over $240 million is reported, the money that is cash on hand.
Yeah, it's kind of like sitting on the sidelines, almost like waiting for this bill to come on the floor, I feel like, to some extent.
Some has been spent, a lot hasn't, but it's interesting. So yes, that is a big issue. And there's also a lot of data that shows that Americans do not like this. There was a very interesting research that was done last October asking about crypto money in politics, and like 75% of independents and 54% of Republicans said they don't like this. They think that they strongly disapprove of this money in politics. And so it is sitting out there. And of course, what's interesting is when the crypto industry is diving into campaigns, they're rarely doing it with a message about how crypto is good. They're doing it with a message about this candidate is for working people.
Positive Bernie Moreno ads that were running in Ohio, for example.
Like in California, the member of the House who the ads that were funded by crypto were about supporting in vitro fertilization. So I think that tells you something too.
That it's not just explicitly about crypto.
Right.
If you were not Tina Unbound, if you were running for re-election, do you think you would be facing attacks from the crypto industry?
I noticed that I have an F rating from Stand With Crypto, so I can imagine that I would not be, I would have a target on my back. But here's what's interesting is that because of this sort of groundswell of opposition to this money, in the crypto money coming into politics, people don't like it, and it's actually, I think, potentially a liability in some races. I mean, I'm not naive, and $40 million getting poured into a big Senate race is like a big, big deal.
Yeah.
But, I mean, in the Illinois primary, for example, there was pretty significant spending against Juliana Stratton, and she won anyway. And in the Minnesota Senate race, the candidate that has the support of crypto does not have the momentum in the Senate primary. So I think it's one of those things that cuts both ways.
I'll disclose, I do not own crypto. Do you own crypto?
I do not.
You do not. Is that because you're just against it, or because you're a Luddite like me and you have boring investments?
Well, I see crypto as, first of all, I don't own any stocks, and I don't own things that have any intersection with the job that I have here in the Senate. I see crypto as, again, like if people want to invest in crypto, that's, I'm not opposed to it by any means, but I see crypto as something that doesn't have any inherent value and also is highly speculative. And in fact, I think most Americans feel that way. It feels like it's probably not worth the risk. There's a Politico poll that I think showed that. So, I think that's sort of the big challenge. When you have, people always say I'm like opposed to crypto, and that is actually not the case. I see crypto as a tool, and it can be used for good things. It can be used for bad things. We just need to make sure that there are guardrails around it so that people kind of know what they're buying and they understand what the risks are. And just like we have in the securities market, for example, we have one of the strongest, healthiest, most respected financial sectors in the world because we have those strong guardrails and protections in place to make sure that there's not self-dealing, for example. We should just apply those same things to this sector as well.
It sounds to me like there's a version in a world where you could support a crypto market structure bill.
Sure,
but
yeah, absolutely.
It sounds like you got some skepticism that that bill is going to come out of the Senate.
Absolutely. I think it needs to. That's exactly right. I don't think there's anybody who would disagree with the premise that we need a market structure bill to put some foundations around this burgeoning and growing industry sector. I certainly agree with that. The question is, what does it look like?
If Sherrod Brown wins his seat back, do you think he'll be the banking chairman or ranking member, or where does that stand?
Well, boy, that is just not in my job description.
No, well, no, you're Tina Unbound. You can just shoot from the hip right here. Has there been talk of that, or is that kind of like something that people don't talk about because it's unresolved?
I mean, I think I don't know whether it's been resolved or not. What I would tell you is that the rules of the caucus would say that when Senator Brown comes back, that when he wins Ohio, that his seniority would go back to the beginning.
Yeah.
And so by that standard, he would not be the banking chair. But whether there have been other agreements or discussions, I just have no idea.
Right, because there's often exceptions to rules in Congress, as you know.
That's right. I remember when Walter Mondale was running to come back to the Senate after Paul Wellstone's crash, which is so horrible, many years ago, and Fritz had an agreement that when he won, that he could regain his seniority.
Yeah, but as far as I can tell, there is no such agreement.
As far as I know, there's no agreement. Yeah.
What is the latest on the House passing a revised housing bill that came out of the Senate?
Yep.
Does that tick you off as someone that supported the Senate's housing bill, or do you think there's a place to get there?
I mean, I think the Senate bill is incredibly strong. It passed with like 91 votes. Negotiated. I mean, how many things have you seen that have been negotiated by Tim Scott and Elizabeth Warren and the Donald Trump White House, and they came up with an agreement? And so I have, of course, always felt that we should pass the Senate bill, and I understand why the House has a different view of that. Now, there was the latest version that came out late yesterday afternoon, right? And we're still trying to assess what is in that version. I gather that there are still provisions around banning private equity buying up homes, which I would strongly support. But I just need to look at the details. And I just hope we can come together, because this is a bipartisan need. This is the thing that Americans are talking about. I can't afford to find a place to live. My rent is too high. There are no homes in the little town where I live that are even available to purchase. We have to get after that. And this bill is a really important step in the right direction. So we should just, we need to get it done.
Bottom line, do you think there will be a housing bill on President Trump's desk this year?
I hope so. I hope so.
Okay. Yeah. Thank you so much, Senator Smith.
Yeah.
That's all the time
we have.
have.
Everyone.
Appreciate it.
Thank you.
Please welcome Harsh Sinha of WISE and Penny Lee of the Financial Technology Association.
Great to see everybody. First, I have to start with the congratulations. You had exciting news last week. Dual listed in both London, now in the US. Tell us a little bit about your moment in the sun on Wall Street.
Yeah, it was fun. I guess you get very few chances to do something like ringing the bell at the NASDAQ, so that was great. It was a big moment for us. But we've been listed and been public for about 5 years. We were listed previously in London, and now we're listed in the NASDAQ. And so it was, the way we think about it is like it's another day in a long journey to continue to build the company.
And what is WISE? Tell a little bit about WISE and why that is important to be dual listed in both areas.
So I love to do this cold. How many people know about Wise? Just curious poll. Okay, what, 35%. So Wise is a global technology company. We are in the payment space, particularly in the cross-border payment space. And we are actually now one of the biggest money movers for when you want to send money abroad or want to lead a global financial life. So if you're managing money in different currencies, like somebody like me is international. I've lived abroad. I've lived in the UK. I lived in India. I lived in the US. So you end up managing a whole bunch of bank accounts. Wise can do that for you in one place. We moved last year $243 billion across borders. And we have, as of the public numbers, 19 million active customers globally. But the reason for the move to NASDAQ also was the US is a massive growth market for us. Even in the last 12 months, we've seen a 27% increase in just US customers sending money abroad. And this is a market that continues to grow. So we continue to invest a lot. And then the other place where we are seeing a lot of traction is specifically small, medium businesses. So as new businesses now spin up, they tend to be international from day one. You are paying suppliers abroad. You're getting paid from different parts of the world. And the Wise account really helps you manage that very well.
And with that, with this global flow of funds now, it doesn't matter if you're starting a company here in the United States, you're likely to get supplies overseas. You have this global economy, and that goes to speak to this whole notion of payment modernization.
Yes.
Yesterday, we saw the White House put out an executive order asking to find ways for the different agencies, whether or not there's impediments, and if so, what is the remedy of that? You've been tireless in this work as well. Tell us a little bit about what an EO from the president does, and also some of the legislation that Congress is maybe contemplating, like the PACE Act.
Yeah, so first of all, it was welcome news and a surprise, but we definitely welcome it. I think if you look at what's happening in the US, America's innovating in a lot of places, especially AI, but if you look at payments, I think the US has been very behind. And this is true for the last 10 to 15 years. Across the globe, there's been a modernization of payment rails, where payment rails have become instant and super cheap. But also the other modernization that has happened is that non-banks have been able to access payment rails. So if you're a payments company, not a bank, because a bank would have credit products and lend, like payments companies don't do that, there is a way to get that access. In the US, it's still not true. There's no payments charter per se. So getting that access is super important for companies like us, because then we can bring down the costs of continuing to serve our customers. And also, the modernization helps to having instant payments across the world. If you look at the G7 countries right now, 6 of them have enabled access for non-banks and have instant payment rails. The US is the only country now that doesn't have this. So I'm very happy to see the executive order from the president. I think it is time, and I'm glad to see this conversation is moving. I tell Penny I've spent the last 8 years of my life trying to figure out how to move this, spending a lot of time here too, working with the different offices. So I'm glad to see this is happening. And we also supported with the PACE Act. The legislation is a starting point, and we see how that evolves. But basically, it's time that there's more competition in payments. I'll give you one more thing. So we were the first non-bank to get access in the UK, for example, which we got direct access to the payment rails there. And after that, so there were 18 providers or banks who had access around 2017. Post that, because the Bank of England and the payment system operators called FPS, they opened the access, there's now 33 providers there. And that has led to much lower costs for the UK citizens. When we got direct access, we dropped prices by 20% immediately. And that's the kind of impact you can have when there's more competition and access.
And one of the issues that is also topical here in Washington is the use of AI. I'm curious, as Wise looks at it from both an operational and from actually a product improvement, how are you all using AI, and what is the impact, especially to a workforce?
Yeah, so I think everybody's already seeing the impact of AI probably in your own daily lives. It's a transformation technology. And we're seeing the value of that even in how we run our business. So one of the examples I'll give you is already we launched something called a Wise Assistant, which enables people to, when they have a question, they can come in on the app and interact to get question solved. And almost 50% of our responses are now being handled by LLMs. And what we are, so you can easily throw LLMs at a problem and have responses, right? But most of them can be garbage. What you want is the tuning such that the quality of the responses are really good too. So that's why we've been careful in how we roll this out. But now we are seeing the technology evolving in the training data that we've got. Of these 50%, all the resolution is better than what a human would do. That is starting to change. And we started seeing this in the last 6 months. Same thing around like when we are a global technology stack. Like the key thing I think previously was mentioned too, the newer companies in this space, we've built everything from the ground up to have a global technology stack. Versus when you usually work with a bank, like I'll give you an example. If you were to move countries from here to, let's say, Australia for work, you may be banking with the same bank, but you will use a different technology stack. You will get different username passwords, different cards issued. Like that's not how most of our companies work. But this allows us to then, because we have one stack, we are able to look at all the data and use AI on training to make sure we can handle financial crime operations better and make sure we are fighting scams and fraud much better, because the data helps us make better machine learning models.
And speaking of the fraud issue, it's often said faster payments means faster fraud. And would love for you to speak to that, especially now we're in a day of AI, and they're like, it's just being fueled even more so by this, new AI tools that are being made. You strongly dispute this. Would love your thoughts on faster payment equals faster fraud.
So I dispute it because I have data, and I have lived this life for the last 9 years, building the technology and integrating into faster payment systems. So WISE is now integrated into 8 instant faster payment systems around the world. We recently did Brazil and Japan. So we're the only company that has this wider network. And we don't see increase in fraud. I think the question that people, the thing that people conflate is you have the technology rails and the payment system that exists, which can move money fast and cheap. Then you have to put processes and controls on top. So for example, biometric login if you use your iPhone, it's much more secure than if you were doing username and password. So if you upgrade to biometric login, less chance of somebody else being able to spoof you. The controls and the requirements from a regulatory perspective have to be stronger on the applications versus like conflating that faster payments is equal to more fraud and faster fraud.
And one of the issues that we also have here is this open question as to who owns consumer data. And you work on a global scale. Open banking, open finance is things that occur, already almost automatic in other parts of the world. What is limiting United States here on that notion of an open banking or open finance?
So again, I can give you the perspective of because we integrated across so many countries, right? So WISE serves 70 countries. We have 80 global licenses. And in a lot of places, open bank is like table stakes now, especially in Europe. And initially it was a slow start, but we have seen the portability of data leading to consumers having better choices and ease of being able to switch products, right? So I think regulation, in this case, we have to be clear that me as a consumer owns my data. It's not the institution, right? My spending habits, my information on how I use my cards, how much I spend on groceries, all of that information is mine, not the institution's. So I should be able to port it. And I should be able to make the choice when I want to split where I put my money or move providers easily. I think we are conflating this again to say the ownership of the data is in the institutions. Actually, if you think about it, the way the industry should be thinking about it is build amazing products, which lets you, the consumer, pick the best product, right? Versus trying to build a moat around data, which seems backwards to me.
Yeah, we do seem to be fighting, fights from many decades ago where you're on a global scale moving forward,
Exactly.
Involving all kinds of technology. And it feels like the rest of the world is so far ahead of us.
Yeah.
Curious what you see as your outlook as to what really does excite you about this future.
Look, I'm actually very happy to see some of the stuff that's happening now in the US finally. As I said, our last 8 years feels like it's been a grind. So I'm very happy to see that there is an appetite for innovation and the pace at which things are finally changing from a regulatory environment perspective. We won't get everything right in the first go. But if we don't try and iterate, then we'll just be at standstill, right? So I'm happy to see instant payments finally launching in the US. RTP and FedNow, they're limits are still very low, like $5,000 to do instant payment, like seems very low. But generally, I'm seeing the direction of travel. I'm super excited about the PACE Act, also the EO yesterday. It just seems like there's an environment where regulators and industry are finally talking. And hopefully we'll have a much more modern payment system for both domestic and cross-border payments.
Great. Thank you, Harsh.
Thanks a lot.
Please welcome Comptroller of the Currency, Jonathan Gould, and Semafor's Eleanor Mueller.
Comptroller, thank you so much for taking the time to join us this morning.
Thank you very much for having me.
Such a pleasure. So as the Comptroller of the Currency, you oversee all of the national banks in the U.S. as well as obviously the U.S. presences of foreign banks. From that perch, how are you thinking about yesterday's executive order that seeks to expand access to the Fed's payment systems for fintech firms?
Well, so I actually had the pleasure of being in the Oval Office yesterday when the president signed the FinTech EO, so it was very exciting. It was a bit surreal. It's the first time I've ever had that experience. In my current job, I'm having a lot of first-time experiences. But no, so we're obviously very excited about it. The OCC, that EO addresses a number of issues, and including the payment system. From my perspective, I've been really reassured and excited to see what I think is a fresh perspective at the Federal Reserve around payment systems. And you've seen that, I think, personified by governors like Governor Waller, Vice Chairman for Supervision Mickey Bowman. And of course, now we have a new chair coming in, I think, imminently. He obviously, too, is a change agent. So I think this is a kind of a long overdue reassessment. Mm-hmm. And I think it's terrific that under President Trump's leadership, he's giving us the push to move in that direction. Again, we at the OCC, view the banking system as a bit of a walled garden. But of course, you don't want the walls to be too high or too impermeable to entrance, right? Because you run the risk of that walled garden over time decaying and becoming decrepit and not serving the U.S. economy, the markets, the customers who depend upon it. So we need kind of fresh entrance. We need that kind of constant refreshing of the system to ensure that long-term it stays relevant and serves its function, which is, again, supporting the financial services needs of U.S. customers and local economies across this country.
So we had French Hill on the stage earlier this morning. He said he actually wanted to have hearings basically on the next steps on some of the same issues that the executive order would target. Said he wanted to bring you in, and he said specifically, quote, you can't just snap your fingers when it comes to expanding access to payment rails. I mean, what is your response to kind of that note of caution?
Well, I think that's true, but I would add that under the Genius Act, of course, we have now payment stablecoins, which are, I think, a huge innovation and could have a real impact in a positive way on the U.S. payment system. And so I see there as kind of a lot of different opportunities and increased options for consumers and the companies that depend upon the payment systems. So I recognize the note of caution, but from my perspective as a regulator, my job is to focus on mitigating downside risks associated with new innovations, whether it be payment stablecoins or increased access potentially to the Federal Reserve maintained payment rails, while preserving maximum opportunity both for consumers, for financial institutions that choose to participate in these new payment systems.
So that was not the only executive order that Trump signed last night, presumably also while you were there. He signed an executive order targeting undocumented immigrants in the U.S. financial system. How are you thinking about that executive order, and how did regulators arrive at the final form that we saw come out last night?
Well, so banks, as you know, have an obligation to know their customer. They need to know the identities of their customer. I think the president's executive order is a common sense set of reforms that give us the tools that we need and preserve bank flexibility around how they establish the identities, that is, how they know their customers. So it seems to me kind of a reasonable trade-off. And we as regulators have expectations that banks are not helping facilitate, whether it be financial fraud or money laundering or terrorist finance and things like that. So again, that know your customer obligation is a very important one. As you may know, the agencies on a joint basis together with the Financial Crimes Enforcement Network recently put out a proposal revising the BSA-AML program rule. And so that EO actually syncs up with some of the changes that we're making in that BSA-AML program rule, including the ability of FinCEN to essentially help focus banks' BSA-AML programs in specific issues, meaning that going forward under that proposed program rule, FinCEN, Main Treasury, will be able to highlight certain areas of potential risk and direct the banks specifically to take a look at those things.
So that obviously is not the only thing on your radar. The OCC is also in the midst of helping implement stablecoin legislation known as the Genius Act, which you were getting questions about in the green room. Can you walk us through what a final rule might look like from your perspective?
Well, I mean, I can't do that.
High level.
But what we have so far is we've gotten a bunch of great comments from hopefully many of the people in this room and many more outside it. I mean, that was the critical first step, right? We put something out there in a proposal, which I thought was intellectually defensible, where we tried to do our best to honor the statutory language, including areas that folks have raised concerns about on one side or another. We tried to put out something that we thought was defensible and that was thoughtful, but it is just a proposal. And so one of the things that I've tried to do is really encourage people to give comments, and that seems to have been successful. Or otherwise, people just felt passionately about the issue, which is great. And so we got a ton of comments on that. So we're in the process now basically of going through all the comments that we received on our NPR, and then we will make changes based on the comments that we got. We are mindful of the statutory timeframes that Congress has assigned us, so we are trying to move as expeditiously as possible, while nevertheless doing a good job making sure we're addressing all the substantive comments that we did receive. This is something that's a very exciting development for the OCC. We're grateful that Congress entrusted us with these new authorities, and we want to do a good job of it. We're mindful of the fact that we're setting at least an initial kind of regulatory framework that may need to be tweaked going forward as the payment stablecoin kind of market develops over time. And simultaneously, we've also been spending a lot of time working on the supervisory framework. So whatever the regulatory framework looks like, how do we then supervise for it? And we're trying to take advantage, again, of some of the opportunities that an activity like payment stablecoins, and based on kind of the enabling technology, we're trying to use that enabling technology like real-time blockchain analytics to actually help us do our jobs better on the supervisory side. So there's a pretty large group of folks across the OCC dedicated and focused on that. And I think, again, people are very excited about the opportunity to do this. And it goes back to kind of the first question on kind of modernizing our payment system in America, which has, frankly, not been the envy of the world.
Do we have a timeline for when we might get a final rule?
No, I would just refer you to the statutory deadlines.
Okay. So as part of that work, obviously, we've seen a high number of charters for non-banks, which is something that progressives, banks have been raising red flags about. Are there any, how are you thinking about those criticisms and, pushing back on them?
Yeah, I'll give you some statistics, which I think should alarm everybody in this room. Before 2008, the OCC alone, so the OCC is not the sole chartering authority. You can go to the OCC, you can go to one of 50 states to get a bank charter. But the OCC, just the OCC, was getting around 100 applications or more per year in the 2 decades leading up to the 2008 financial crisis. After 2008, we were averaging between 0 and 2 applications per year. The actual average over the last 18 years, I think, is 4, but that's only because back in 2020, when I was last at the OCC, we did 15 applications that year. That's a disgrace, okay? That's a disgrace. And that was also, those extremely low numbers of applicants were because we and other federal banking agencies, including the FDIC on deposit insurance applications, was sending a very clear message that applicants need not apply because you're not going to get a charter, period. The statute hasn't changed. Our licensing manual, which states our procedures, including our timeframes of how we process applications, that hasn't changed. It says 120 days. We just stopped doing it. So what we are doing at the OCC is actually restoring regular working order and doing our jobs on the timeframes that we've established and consistent with the statutory factors that Congress has given us. We don't have a zero risk tolerance anymore. That's not what the statute says. The statute talks about a reasonable chance of success. That's how we evaluate applications. That's how we will continue to evaluate applications as long as I'm the comptroller. I'm heartened to see changes too at the FDIC under Chairman Hill's leadership to reform and make, I think, more thoughtful the FDIC deposit insurance application process. One of the reasons you're seeing so many kind of national trust bank charter applications is, number one, just pent-up demand after 18 years, okay? But also the fact that the FDIC deposit insurance application process has been so laborious and so slow, right? Meaning the chartering authority will make a decision and then the applicant is still waiting and waiting and waiting to see whether or not the FDIC is going to grant deposit insurance application. That's a higher risk proposition, right? You as an applicant are spending a ton of money building up all this stuff. The way that the OCC process works is you get an answer, you get a preliminary conditional approval or not earlier in the process. So you've expended fewer resources and you have a sense of, hey, is this going to go or not? Whereas, there are changes underway, I think, at the FDIC, again, under Chairman Hill's leadership, to make the FDIC process a little bit more thoughtful, a little bit more faster, and so that applicants or would-be applicants will have a better sense of how much they'll have to invest to get an indication of, hey, is this going to be a go or a no-go?
Mm-hmm. Are you preparing at all for any of the banking groups to pursue litigation over these non-bank charters?
Look, I mean, obviously I can't predict what certain groups are going to do or not do. They have to do what they think is in the best interest of their members. I'm confident that we have an excellent litigation team at the OCC, and I'm confident that we have full legal authority to do the things that we're doing. And so, I used to be the chief counsel at the OCC. We sometimes got sued. It disciplines us. There's nothing wrong with being on the receiving side of a lawsuit. It makes sure that our pencils are a little bit sharpened and we do our job a little bit better. But again, whether or not somebody sues us or not, there's nothing I can do about that. People need to make their own decisions. I definitely can't advise folks on whether to sue us or not.
So last month, the OCC said federal law preempts state legislation in Illinois targeted at swipe fees. Can we expect similar arguments of federal preemption in some of these 11 other states that are also pursuing similar swipe fee legislation?
So I can't speak to Illinois. I'm recused on that issue. I can speak generally to preemption.
Yeah.
So one thing I'm often struck by is when I think back to the creation of the OCC in 1863, and President Lincoln and Secretary Chase are trying to hold the nation together, ensure our political union on battlefields. And of course, one of the reasons the OCC was created was to bolster the funding of that war effort. But at the same time, those individuals also had the foresight to recognize that it's not enough to fight on the kind of battlefields to shore up the political union. You need to forge an economic union. And the way you forge an economic union is by creating and facilitating the rise of nationwide markets, whether in mortgages or other forms of credit. That is one of the reasons why the OCC was created, is to facilitate the economic union that President Lincoln foresaw would be necessary to stitch and maintain the integrity of our nation after they had won on the battlefields. So yes, that is a reason for the existence of the OCC, and we will continue to defend preemption in legal courtrooms as appropriate. But we also will recognize that preemption, federal preemption, is not the sole prerogative or perquisite of national banks. State banks also, per Congress in 1997, have preemption powers as well, we will defend those as well. You've seen the OCC live up to its word and also swoop in, for example, in the 10th Circuit in Colorado, and defend state banks' rights to preemption as well. The other thing I would note is that preemption is not a big bank versus small bank thing. The reality is that given modern technologies, even community banks benefit from preemption because they are not solely limited by arbitrary geographies. They can define communities however they want them to define them, and they can offer their products and services remotely through the internet. And so they too operate across state lines. So the entire rise of nationwide markets, whether taken advantage of by large banks or small banks, national banks or state banks, is facilitated through our agency, and it will continue to play its institutional role. And for those who care about preemption in this room, I would encourage you all to shore up the political support and the political consensus that has existed for decades that is responsible and necessary for legal preemption to prevail in courts, meaning that ultimately the parameters of preemption are all downstream from the political consensus that's necessary to maintain it. So for those of you who care about preemption, please educate your members of Congress, your senators, on why it matters. We will continue to play our role, but we need you, or at least those of you who care about preemption, to do so as well.
Are there areas beyond swipe feeds that you feel would be helpful for the OCC to establish that federal preemption, like maybe lending, privacy?
I mean, so we depend upon the institutions we supervise to be our eyes and ears. We can't, even though I think we have a superb legal team, we really can't monitor all the states for everything that's going on at the state legislative level or even more local level. So we kind of depend upon people to tell us, hey, have you been following this? We think this is an issue. This is why this is an issue. What are you going to do about it? So that's kind of how we do this. We really depend upon our institutions and the banking bar to help us be eyes and ears as to what's going on.
All right, well, I know you got a train to catch. Thank you again for making time this morning.
Thank you so much.
All of you for tuning in. And we'll see you next time.
Great to be here. Thank you.
Thank you for attending today's event, and a special thanks to our partner, the Financial Technology Association.